The global financial crisis has a lot of people feeling nervous about investing in the stock market. But according to some experts, if you have a stomach for risk, this might be a good time to buy stocks. Joining us in New York, financial advisor Gary Hager. Good morning to you.
Good morning, Chris.
What's your opinion? Has the market pretty much bottomed out?
I will go on record now and say that I believe the bottom is in. I believe it occurred on Friday, and I believe while we may test these lows again once more, overall, I think we're going to be heading higher from here.
So are we going to see a lot of buying tomorrow morning when the market opens?
It's really hard to say specifically whether buying is going to come in. I would look at Asia tonight and see how Asia responds to G7 and what happened over this weekend. But overall, I really believe this is a lot like 1987. October 19th, the market was down 22%. October 20th, the market was up 10%. And people will tell you that if you haven't sold by now, this is not the time to sell. In fact, this is the time to start seeking bargains.
Let me ask you about some of those bargains in a minute, but you mentioned the G7, and a lot of people were looking to see what they had to say, giving them some indication of how Wall Street and other global financial markets might react. General analysis seems to be that they were big on broad statements, short on specifics. Do you think they did anything to help the situation?
Again, they're politicians. So did they help overall? I think that when Hank Paulson came out and said that they were going to allow a significant part of the $700 billion to potentially be used to invest in stock in ailing financial institutions, it was spectacular and overdue. So that will absolutely help. The grease is there. The oil for the system is there. The unfreezing of the commercial paper and the credit markets is starting to happen. We're going to be doing better. We really are.
All right. So for people who do have a little bit of a stomach for risk, the market was so volatile on Friday, it freaked a lot of people out. But if they have the stomach for it, where are they looking for bargains?
Well, we're not a big fan at Integrated Wealth Management of telling people that they should be looking for specific stocks, let's say, to invest in. Rather, what people need to do is take a breath, take a step back, and look at a plan, a blueprint. We call it an investment policy statement, but what it does is it really gives people an understanding of what they should be in and what they shouldn't be in. You need to know things like time horizon. People are worried about they're moving to retirement. Do I have enough? Should I get out of stocks? You need to also know about risk tolerance. You mentioned the volatility. I liken it to a roller coaster. If people like roller coasters, they get off a roller coaster and they go, let's go again, then people should be involved with the stock market potentially a little bit more. But if they get off and they've turned green, I think people should systematically be peeling back from the stock market and moving into better safe haven investments.
Well, where are the safe havens? Are they still there, especially for people who may have short-term needs for cash?
They've been there. They'll still be there. One of the great absolute safe haven investments is real estate. Now, I'm taking a pause. That's exactly right. Real estate. Are you kidding me? So where I want to go is I'll ask you a question. IBM, everybody's familiar with Big Blue, the bellwether. If you can invest in IBM, you would first think, well, I'll buy their stock. But you could also buy their bonds. And further, what about buying their real estate? What if you own IBM's building and you leased it back to them? Would that be a reasonable investment for real estate? It produces a dividend. Even if IBM, the bluest of blue, went bankrupt, and they had to file Chapter 11. They still have to pay operating expenses. They still have to pay their real estate. You will still earn money.
So how much do you have to get into something like that?
Very small amounts. Any investor in America can participate.
All right. So it looks like you're feeling a little bit bullish.
I'm bullish. I've been bullish. And I would say one of the things that's very important is people need to look at, and I've mentioned this before, alternative investing, what's referred to as non-correlated. Vehicles that prosper and profit during bad times. And the way you look for that is you don't look at markets, you look at people. Our approach is bet on talent, bet on success over time. 10-year track records are better, we always advocate. So we want to see people that have shown what they can do in bad times. Bet on the jockey, not the horse.
All right. Good advice. And some of the first positive stuff I've heard in many days. Gary, thanks so much for coming in. Appreciate it.
Thank you, Chris.